Welcome back, everyone. It is Rod with POW Group. It is Thursday, August 27th, and in today's video, we're going to discuss how big can this bubble really get and just how far is Fed and the money makers and the market makers going to push this market higher. And I think I have a theory. Again, I'm not trying to call the top or anything like that, but I'm just constantly thinking of how I can help other people, and I've been thinking of all different scenarios, and the one that I've concluded on that I found some more interesting evidence to today. History doesn't always repeat itself, but it can rhyme, and I'm starting to see a lot of red flags as well. And this Market Watch article that I saw today definitely hit home. So it started to have me look back in time a little bit more to get some clues on what we could expect this time go around. Taking a look at the article here, this signal that called the 2007 market top is raising a red flag, and that signal essentially, it goes on to discuss that the Fed meeting today, which I did a video on earlier today, you can check that out, but essentially they're just relaxing their stance on the monetary policy, and they're going to let inflation target of 2% over time. But essentially the number one thing that they notice is that VIX is not trending as you would normally expect it to. So they say that VIX index raised a red flag because the volatility index should move in opposite directions. Any divergence from this, which Felder said, has now appeared, can signal an impending reversal. So they did a graph that'll give it a visual representation. So you can see here stocks are trending up, but the VIX was trending down. And we saw a huge bounce in the VIX today. And I'll highlight that here now. So we opened the day here at the 23 level, but we hit a low of 21, and we were up about 25% on the day. We got as high as 27.1, and we broke past the prior resistance here at 24.90. We are breaking out of that descending wedge that we all know, that falling wedge that we were watching. And as we know, moves with VIX can happen extremely fast, and that was an example of that today. Went well outside the Bollinger Bands and then pulled back just to test the top of the bands again. So taking a look at SPY, I've highlighted this a few different times, and I'm going to go over why I think that this is resembling the .com bubble and why we need to be cautious. Again, not calling the top, not telling you what to do to buy or sell. This isn't financial advice. Do your own research. All investments have risk. This is just for educational and theoretical purposes. But you can see today we were extremely volatile. We were swinging to the upside, huge swings to the downside, held the 5-minute uptrend until we double topped. And that's when the waterfall came in on QQQ. It happened on SPY. It happened on all major sectors. We saw Bitcoin pulling back. We saw gold pulling back. We saw oil pulling back, everything heading in one direction, and then everything bounced together at the same time. And what I think is happening is we're starting to see distributions at these levels, and that's why we're seeing such huge flushes down and in such rapid form. And another thing that I think that highlights my theory on why this could be like the .com bubble is that we know that the US dollar is currently beat up pretty bad. It is likely due for a bounce here. We got close to the high of 93.47. So if we can break the high of the previous weekly candle, then we can be confident that the weekly bounce is underway. But we did pull back, and it's a weekly inside bar at this point. So we're watching a tightening range. You can see here we got a little bit of a inverse head and shoulders on the daily. Whether or not this breaks to the upside, that's usually how these candle formations, these pattern formations break. So if we start to see a move up, that will give us confidence that the weekly bounce is underway. And it would also line up well with my theory. So my theory being, take a look at Apple and Tesla. So first clue that made me start to ponder this was that Apple and Tesla, the two most high-flying names right now, you know, coveted and decorated names out there in the stock market. These companies are at record highs, valuations in the billions, hundreds of billions. Tesla will be soon worth $1 trillion in record time. Apple's been around since the 80s, and they're now worth over $2 trillion, and they are the biggest company in the world. So they're going to be doing a share split on August 31st. And guess who else is going to be splitting their shares? You guessed it, Tesla. So Tesla, and so let's think about this for a second. Today it's the 27th, so we got one more trading day. So as we know, they've been flushing we've been slow grinding up in SPY and the overall stock market, and then we see a quick 15, 30-minute flush, and then just a V bounce in recovery. So what they're doing is they're conditioning everybody to buy the dip. And I think not in the not too distant future, things are going to change dramatically, and this might not be the dip you want to buy. But they're certainly making everybody think that, because tomorrow is the last day to own Tesla and Apple, right before the end of the week, which is the end of the cutoff for the share split. So if you own one share of Tesla by end of day tomorrow, you will be given 5 shares as a result. So 4 extra shares, 5-to-1 share split. So then what I think could potentially happen is we start to see a little bit of a mini sell-off in tech, which we already did. We saw today Amazon, Apple, Tesla, all these names, Facebook, huge FANG companies, Google, they were all trending down, and we saw $3, $4 shaved off QQQ in no time. So what if they're just buttering people up to start selling off on the 28th, and then people are going to hold over the weekend because they have to wait until the 31st to get their shares, and then it dips. They think it's just another buy the dip opportunity, and maybe this time it's the end of the month, it's a new month, maybe this time it's different. So maybe we start to see distribution. And I'm going to highlight something really crazy here now of what I thought. I was actually speaking to my mother about this because she was asking me about some advice with the US dollar and looking to convert potentially some Canadian funds into US funds, expecting for a dollar bounce. And I think that could be what we're looking at, because take a look at this. The .com bubble peaked in 2000, okay? So let's go back to Apple, back long time ago into the 2000 range. Here we go. So we're looking at 1997. Okay, so we started our ascent here into the 2000s. We hit a high of 537. Now take a look at this. There was a share split. This time it was 2-to-1. Okay, so they ran it up. It was outside of the Bollinger Bands on the monthly. Keep in mind, we don't generally close outside of the Bollinger Bands very often on the monthly. They were well outside. They had run from the lows. We had run hundreds of percent, 370%, wherever you want to measure it from, the below here. It's hundreds of percent, between 300% and 500%. So what happened was they had a share split. Then we saw a trend change, monthly lower high and lower low. And what did they do? They likely took advantage of people loading up in advance. It's a known event. It was more of a sell the news event because it was known. And the market makers used that as an opportunity to capitalize on that and let retail be stuck holding the bag. And look where we ended up going from there, 537 all the way down to 97 cents. We lost 82% of the value after that share split. And you might be thinking, well, yeah, Apple wasn't who they were today back then, and they have a lot more products, or a lot more established, blah, blah, blah. But in my personal opinion, it's starting to resemble very, very similar. So look at the bands here on the monthly, and look how much wider they are. And look how much more out of the bubble we are. This is just absolutely huge. And if you take a look, it's going to be in a couple of days. And again, I'm not trying to put my tinfoil hat on or say that I have a crystal ball, but this is what I think, this is my theory and what I think has the most logical sense. And this is what I would do if I was a market maker who was borderline crook, for lack of a better word. But if you look here, if we dropped another 80%, that'd bring us right back down to the March lows. And I wouldn't be surprised in the slightest. We only have one monthly support level here down at 212, and we could easily go back to the March lows. Whether or not we start to see, some are saying this could be the lost decade where we potentially don't see any gains in stocks for the rest of 2021 to the rest of 2029, potentially. maybe things are just going to trend down from there. But let's take a look on the monthly just to give you guys a little bit more of a clue on what I saw. So let's go back to the US dollar back on the monthly chart. We'll take a look at where it was. So 1997 was when Apple started its ascent. And look at that, the dollar was at all-time lows, right? Well, not all-time lows, but it was at the near low. It was basically forming an inverse head and shoulders, and we exploded to the upside. And look where it topped out. Same time Apple bottomed. And then we're starting to see potentially another monthly inverse head and shoulders. I mean, if this ends up happening, guys, this is absolutely too perfect. And I'm happy that I made this realization. Hopefully you guys found this information valuable. Hopefully, I mean, look at that Tesla bubble. That is just absolutely ludicrous. And I feel bad for a lot of people that could potentially, like, imagine if you're holding these shares, well, I have to hold till the 31st to get my share conversion, and they just tank this. Again, not trying to scare or spread FUD or anything like that, but these are things you need to be worried about because nobody else is worried about you. You should be thankful that I'm even giving you a little bit of a heads up, because these crooks on Wall Street will not give you the time of day, and they'll certainly do everything they can to shake your pockets dry, and they'll literally hold you by the feet until they suck every last dollar out of you. And I think I've finally understand where they're going with this and what their master plan is. So let me know in the comments below if you agree with me, if you have a different view. What do you think is going to happen over the next days, few weeks, few months? I'd love to hear from you. Hopefully you found this information valuable, and you'll check back in. Consider subscribing to the channel, like the video if you enjoyed this content, and we'll see you on the next one. Take care, guys.